Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
G'day, welcome to the Global View. On this Tuesday, I'm Andrew Gagan. Good to have you with us. Let's check what's going on at a macro level globally. Well, US Treasury yields, they've eased ahead of US economic data, including this month's non-farm payrolls report and personal consumption expenditures price index. That's likely to determine the next move in US monetary policy. Markets pricing in an 80% chance of the Fed holding rates steady next month, with the probability of a rate hike in November now seen at roughly 56%. The yield on the 10-year note was down to 4.2%, the 2-year lower, but does remain above 5%. And the US dollar hit a 9-month high against the Japanese yen, but dipped against other major currencies as investors anticipate possible intervention from the Bank of Japan to shore up its currency. The Aussie dollar trading, well, it was up around 1/3% overnight at 64.3 US cents. All right, well, let's get some investment ideas when we look offshore, and certainly in the wake of Jackson Hole and what's going on at a macro level, how that's likely to determine investment decisions. Lachlan Hughes joining us from Swell Asset Management. Lachlan, good to catch up with you again. Thanks for joining us. Well, what was the takeout from Jackson Hole? Because it looks as though certainly stateside investors are now much more interested in what's to come in terms of those data points that I just mentioned, in particular the jobs, to get a good reading of where the US economy is sitting. I mean, did Jackson Hole move the dial at all?
Well, that's a good point you make. But yeah, Jackson Hole was interesting. I mean, I think Jay Powell's been very consistent since he became Fed chair, and he's going to do whatever it takes. And through the pandemic, that was the consistent message we received, and that's still the message we're getting today. So, I mean, since he's come in I guess February 2018, he's seen a pandemic, he's seen war in Europe, record stimulus. But despite all those challenges, he's been very clear that he will do whatever it takes to bring inflation back to 2%. And I guess we are seeing signs that that inflation is starting to come down. I guess one of the tricky aspects of it is 40% of core inflation is shelter. And just given the way that leases are renewed, it actually takes a while for that to flow through to the inflation numbers. So despite the fact we're seeing some green shoots in terms of shelter costs coming down, it will take some time to flow through. So we expect inflation to continue to come down, but it'll come down slowly.
All right, so what then for interest rates? I was just mentioning there that markets pricing in 80% chance that the Fed will stay on hold next month. But when you look at that, given what we saw at Jackson Hole too, sort of leaving the door open that there could be more to come, how does that influence your investment decisions? I guess, particularly when you look at large, mega cap tech stocks and what those bond yields are doing in terms of future growth.
No, definitely, Andrew. Well, I guess we're a bottom-up investor, so we really look at the company first and the macro second. So it really doesn't instruct our investment decision, mainly because we think it's unknowable, but we think it's very interesting. It's something we follow closely. Our view with interest rates is that we're closer to the top than the bottom, which doesn't, I guess, help a lot of people. But we think we're towards the top end. The 10-year rate's got a 4 handle at the moment. It's over 4%. We expect that to moderate as inflation continues to come down. And I think given that we're expecting 80% of people expect rates to be held steady at the next meeting, I think that's likely to happen. I think the Fed will leave rates where they are just to see, interest rate policy takes time to work through as well. So they've lifted rates a couple of times. So let's just wait to see what the impact of that is. And I think they'll stay steady from here. But to answer your question, yeah, closer to the top than the bottom.
Okay. All right. So Lachlan, interested then in, you, as you said, your bottom up. What you're seeing, what opportunities you're seeing right now, aside from tech, I mean, we discussed that before, where are you looking then?
So Andrew, I guess we've talked about big tech for a long time, and particularly last year it was looking very, very cheap. But yeah, we are finding opportunities outside of big tech, and a couple of names I could mention for your viewers. One is GE Healthcare. Now this is a 129-year-old startup. It's been spun out of the GE business, which obviously had a number of different segments. And what we find over time is that these companies which are spun out, they're actually great opportunities to invest because they get a management team that is solely focused on the one company. And what can happen in these big conglomerates like GE, it's very hard to get access to capital. So they can often be quite constrained because they're competing for capital with different segments of the business, whether that's jet engines or whatever it is. So we see a big opportunity for GE as it gets its sole focus. It's got a very good management team, and we've got an aging population globally. So we think that the demand is going to be strong, and there is structural tailwinds there. One of them is really precision healthcare, and what we're seeing with precision healthcare is it's becoming more and more important over time. And drugs like the Alzheimer's drugs, in order for those drugs to be monitored, the patient's required to be screened consistently while they're taking the medication. So we see opportunities for GE to grow strongly with the aging population, but precision healthcare to underwrite that growth. And we see strong structural growth ahead for a business like GE.
Okay, all right. Elsewhere, I see that you've got Intercontinental Exchange on your radar there. That's the Global Financial Exchange and Clearinghouse.
Excuse me, that's right, Andrew. So yeah, it's they own the New York Stock Exchange, one of the well-known exchanges that they own. Now, they've obviously been big in the financial markets, but around 3 or 4 years ago, they started to move into the mortgage ecosystem in a big way. And what we see today is to underwrite a mortgage, it can take 60 days. And the reason it takes so long is because it's very much an analog process. There's people required, there's forms. And what Intercontinental Exchange wants to do is to take this business and digitise it. And despite the fact we've seen digitisation move through almost every industry, this one has managed to stay analog. It's quite unbelievable, 2023, that they still have this process. But I see opportunities for not only to digitise it, but to accelerate it, give a better result for the end consumer. And this is a huge market. And part of this, they've been basically acquiring different companies over the past few years. And the latest one is a company called Black Knight, and it's a big player in the mortgage ecosystem. It's $11 billion acquisition, and it was really held up by the FTC in the US. This has now been agreed. They will acquire Black Knight on the 6th of September, so that's coming up very soon. But this is another business that we obviously still see growth within their core business, but now mortgage is a third of their business, and we see this as a real growth driver for them. So yeah, look, we are finding opportunities out there again. So you just have to look very closely.
All right, so there are two opportunities right there. Lachlan, interested to get your view then. That's what you're prepared to buy, perhaps. What are you not prepared to do? So what are you passing at the moment? What stocks have you sort of looked at and thought, no, that's not where to be?
Yeah, no, Andrew, that's a lot more fun, isn't it? The things we're not interested in. So I guess we've passed on a few. One, we looked at another spin out which came out of Johnson & Johnson. It's a company called Kenvue, but I guess although the company's not familiar, the brands certainly are. So they own Listerine, they own Tylenol, they own Neutrogena. And this is one that looks very interesting. But what we saw through the pandemic is these large consumer healthcare businesses jacking up prices for consumers, and they went up 10, 12, 15%. And we just want to see that flow through now. So we really feel like the easy money's been made there, but it's one that we're going to stay close to because we know historically that spin outs can be very good opportunities. So it's one that we've done the work on, Andrew. We might return to it at some point, but not quite now. And the other one we really spend a lot of time on is the car manufacturers, so Ford, GM, and Volkswagen. And we thought it probably good to revisit those ones with, as they transition to battery electric vehicles. And I guess despite the valuations being very compelling, the ones that we don't feel incredibly confident about, if we look forward 5-10 years, it's hard to say who's the winner's going to be. I think Tesla will be a very big player. But there's new competition. I mean, these car manufacturers haven't had competition for a very long time. 10 years ago, the only new company that we'd seen enter the space was Tesla. But now we've got Rivian, we've got a number of Chinese manufacturers. So I think it's going to be a very competitive space, and it's one we're happy to pass on for now, Andrew, but certainly as part of our process, but one that we'll keep an eye on. And if it does get interesting, we'll revisit it again.
Just in that space, though, Lachlan, so you're passing on those legacy car makers. Are you willing to buy into any of those pure plays, or are you there already? In terms of EVs?
Yeah, 100%. And look, we've looked at Tesla's the one that I guess I actually drive a Tesla. I haven't bought the stock yet. I find the stock a little bit too expensive, but a lot of the valuation's made up with things that I'm not 100% sure that they're going to be a big deal in the future. Whether it's I guess they've got a robot in terms of like the robotics. They've done very well with the manufacturing process, but whether they can build a standalone unit, what it means for driverless technology, it's very hard to say what that's going to look like. It would have thought, to me anyway, I thought, a decade ago we would have had a self-driving car by now, but it seems to be a very big challenge to solve for these companies. So although Tesla is interesting, when we're uncertain about certain aspects of the story, we're happy to put that one aside. And Tesla's one that we've kind of said it's a bit expensive and we're not quite sure, so we put that aside for now.
Yeah, well, we'll see, I guess, whether that AI revolution that's underway now will help drive that transition, particularly to driverless technology. Interesting space to watch. Lachlan, as always, great to get your ideas. Thanks for joining us from Swell Asset Management.
Thanks, Andrew. See you next time.
All right, a quick check of the market just before we open. That's where we're expected to go, up around 1/3%. That's after a solid gains we saw on global markets overnight. Stay with us. The open is just around the corner.